Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from Luna Innovations, and let me tell you, it's a bit of a roller coaster. Think of it as a high-tech company trying to navigate a very bumpy road with a few unexpected turns. You might say it's a lunatic situation. We are looking at Luna Innovations' recent filing with the Securities and Exchange Commission, or SEC. This is basically a corporate oops, we need to tell you something moment. And what they're telling us is about a change with their accounting firm. The big news is that on February 14th, their accounting firm Ernst & Young, also known as EY, resigned. That means they quit auditing Luna's financial statements. Think of it as the referee walking off the field during a game. It's never a good sign. EK was in charge of checking Luna's financial books for the year ending in December 2023, but they quit before finishing the job and said they wouldn't be coming back. Luna had been thinking about changing auditors anyway because EY was taking too long and costing too much. However, EY's departure complicates things, and Luna is now looking for a new accounting firm but hasn't found one yet. This gets even more interesting because Luna already said that some of their past financial statements shouldn't be trusted. This means they made mistakes in how they reported their money situation. Specifically, the reports from 2022 and parts of 2023 have problems. They need to be redone, or as they call it, restated. Adding to the challenge, Luna hasn't even filed their financial reports for most of 2024 or for the end of 2023, so they are behind in telling everyone how their business is doing. Interestingly, Luna says they didn't have any major disagreements with EY about how they do their accounting, so it wasn't necessarily an argument about numbers. However, there were some reportable events which are issues that need to be disclosed. One big issue is that Luna admits they have weaknesses in their internal controls. These are the systems and rules that keep their financial reporting accurate. Because of these weaknesses, EY didn't think Luna could produce reliable financial statements. It's like saying the company's financial compass is broken. Because of the mistakes and other issues, EY said they needed to do a much bigger audit, which means checking even more things. This was because of possible wrong financial reporting, breaking rules, and the fact that Luna's internal controls weren't working well. Another reason EY quit is because Luna is planning to remove their stock from being publicly traded. They're doing this because they don't have enough stockholders anymore. This means EY doesn't want to be linked to financial statements from a company that isn't keeping up with the rules for public companies. Luna had a special committee looking into things and they found some problems. 8 employees were fired and 1 resigned. Luna says they've brought in new people and are trying to improve how they handle their finances and report revenue. The accounting firm told the special committee and executives of the company that there may be some concerns regarding the conduct of one or more members of group management, specifically regarding the conduct of European group management. The board analyzed findings related to the concerns communicated by EY and the special committee, and board concluded that there were no grounds to presently terminate for cause any additional members of the aforementioned management group. The company formally communicated these conclusions to EY. However, even after all of this, EY said they still had concerns. They felt that some information needed more investigation and that they might not be able to trust what Luna's management was telling them. This is a pretty serious statement from an auditor. Finally, EY said that the issues with the old financial statements weren't fixed when they quit. So all of these problems together led EY to resign from auditing Luna. Luna included a letter from EY in this report, basically confirming that what Luna said about their resignation is accurate. So what does this all mean? Well, it paints a picture of a company facing significant challenges. They've had to restate past financial results, their auditor has resigned with concerns, and they're planning to deregister their stock. Now let's step back and look at the bigger picture. Luna Innovations appears to be in a turnaround situation. The company clearly had significant internal control problems, as evidenced by the need to restate financial statements and the auditor's resignation. The change in leadership and implementation of new policies are positive steps, but the effectiveness of these changes remains to be seen. The decision to deregister the stock is a double-edged sword. It reduces the costs and regulatory burden of being a public company, but it also limits access to capital markets and reduces transparency. The departure of the auditor is a red flag that raises concerns about the reliability of the company's financial reporting. There are certainly risks involved, particularly if the internal control weaknesses persist or if the company fails to regain investor confidence. However, there's also potential upside if the turnaround efforts succeed and the company can restore its financial health. Without updated financials and a clear picture of the company's current performance, it's difficult to provide a precise valuation. However, based on available information and considering the risks and uncertainties, a reasonable price range for Luna Innovations would be between $1 and $2 per share. Given the current situation and the uncertainties surrounding Luna Innovations, my outlook is cautiously bearish. While the turnaround efforts are encouraging, the lack of financial transparency and the concerns raised by the auditor make it difficult to be optimistic. Thanks for watching Corporate Decoder. If you want to stay up to date on the latest corporate dramas, be sure to subscribe.